Happy Sat Stacking Saturday. Welcome everyone to No One Daily Bitcoin Pod. In today's show, I'll be sharing the latest Bitcoin technical analysis and quoting Max Keiser. Gold is too centralized. It can never compete with Bitcoin. As a safe haven, gold is the poor man's Bitcoin. We'll also be discussing Bitcoin holds firm as stocks lose $5 trillion in record Trump tariff sell-off. The silver lining is there has been a decoupling. We'll also be discussing mixed martial arts champion Conor McGregor, former champion that is, launches his very own meme coin, believe it or not. Also, it's Satoshi Nakamoto's 50th birthday as of today. We'll be discussing this, as well as on April 5th, 1933, the government tried to take everyone's gold. Remember the Gold Seizure Act of 1933. And today is the 92nd anniversary of this executive order. We'll be discussing why this matters, as well as Bitcoin Policy Institute proposes a $2 trillion bit bonds to slash the U.S. debt. And the ultimate plan is to acquire 2.2 million BTC. We'll also be taking a look at the overall crypto market. All this plus so much more here on Sat Stacking Saturday in today's show. If you guys are new to the channel, important, smash the likes. Go ahead, subscribe, then ring that bell. Turn on all notifications. That way you receive notifications each and every day when I go live. As week to week, we switch up the time frame. You know what I mean? Evolves around my lifestyle, and I am a papa, first and foremost. And if you don't know, now you know. Today is pod number 1954. I'm your host, JV. It is April 5th, 2025. Happy Sat Stacking Saturday. Let's kick it off with our market watch. As you can see, we're correcting some today. There has been a decoupling, at least against the stock market, which had over $5 trillion wiped out in the past 48 hours. Bitcoin's only down 1% on the day, maintaining above 83,000 at the time of the live. Ether is all the way down to 1,700. XRP, $2.12, and the majority of the market, as you can see, in the red. And checking out coinmarketcap.com. The current crypto market cap sits at 2.65 trillion. The BTC market cap, 1.645 trillion. And volume, we have 44 billion. In the last 24 hours, down 58% overall on the day. And the Bitcoin dominance is coming in at 62% even, same as yesterday. Ether dominance, same as yesterday, 8.1%. And checking out top 100 crypto gainers past 24 hours, we got the Pi network leading the pack, up 8%, followed by OKB, up 5%, followed by Athena, up 2.5%. Very modest gains as the majority of the market is correcting and in the red, unfortunately. And checking out the crypto bubbles, get a visual perspective on the day. On the daily, you got Pi network, OKB, and Enya in the green, virtually everything else in the red. So 97% of the market in the red, unfortunately. Zooming out on the weekly, very similar scenario, but more blood red. And zooming out on the monthly, very similar scenario, but ultra blood red. Wreck City here. And checking out the Crypto Greed and Fear Index. Last month we were 25 extreme fear, and today we're 30 in fear. Checking out the time chain calendar. We're currently on block height 891,084, and we have 158,916 blocks into the next halving, and the exchange rate, 1 Bitcoin is still equivalent to 1 Bitcoin. So stack those sats accordingly. And let's see the dollar conversion as of today, if it updates here on the chart. See if it loads. For some reason, it wasn't loading earlier. I just refreshed. 1 Bitcoin equals 1 Bitcoin. Who really cares about the fiat equivalent? I guess that's the lesson of the day. 1 Bitcoin will always be equivalent to 1 Bitcoin. So stack them sats, put down the gats, and pick up some Bitcoin cash from my man Sergio over at BitcoinCash.net. Let's dive into a little TA, aka astrology for the broskies. No country wins a global trade war. Bitcoin does surge. As a result, here's the latest TA. We'll also be pulling up the live charts. But first, here's a quote from Max Keiser. Gold is too centralized. It can never compete with Bitcoin as a safe haven. And one of my favorite all-time quotes from Max, gold is the poor man's Bitcoin. How do you like those apples, Peter Schiffmeister? That's right. U.S. President Trump trade policies will create worldwide macroeconomic turmoil and short-term financial crisis that will ultimately lead to the greater adoption of the Bitcoin as a store value asset. According to the Bitwise analyst Jeff park. Now, economic instability from the trade war will cause governments to adopt inflationary fiscal and monetary policies, which will further debase the currencies and lead to worldwide flight to safety and alternative stores of value like the pre-low biddy going up forever, Laura. This increased demand for the biddy will drive the prices much higher for the long term. Where my long-term hodlers at? Make some noise. The tariff costs, most likely through the higher inflation, will be shared by both the U.S. and the trading partners, but the relative impact will be much heavier on the foreigners. These countries will then have to find a way to fend off their weak growth issues. Despite the increased demand for the biddy as a store of value against rapidly depreciating fiat currencies such as the U.S. dollar, driving the Bitcoin price higher in the long term, global financial markets would feel the short-term pain and wealth destruction of the trade war. Max Payne, send it. Now check it. Tariffs are stagflationary for the world as a whole, according to the economist and billionaire hedge fund manager Ray Dalio. A lot of people look up to him as one of the greats, including Max. So shout out Ray Dalio. Tariffs tend to be more deflationary for the levied good producers and more inflationary for the importing country. He concluded that the level of the debt and trade imbalances will ultimately lead to the global financial shift that changes the established monetary order. Quoting him again, Coin Bureau here, if these trade tariffs do lead to massive trade war, it is going to be very ugly for the entire world. The analyst also said the U.S. economy has a 40% chance of a recession this year. What officially defines a recession? You guys let me know. Amid fears of a lengthy trade war and the macroeconomic uncertainty brought by the protectionist trade policies. We also have Anthony Pompliano recently speculated that the U.S. president is deliberately crashing the capital markets to force interest rate cuts and lower the cost of servicing the U.S. national debt. The interest rate on the 10-year U.S. Treasury bonds declined from approximately 4.5% in January to currently 4%. Pompliano also concluded that while the current U.S. administration's policies will create the short-term pain, the effect of the lower interest rates will encourage the borrowing and drive the risk on asset prices higher in the long term. So ultimately, for the long term, all this tariff trade war supposed to be bullish for the Bitcoin, but not so bullish, obviously, for the stock market, which has been getting wrecked since the announcement from the Trumpster a couple of days ago. Again, over $5 trillion wiped out of the market, which we'll dive into deeper in our next story. But first, I promised to pull up some of the live charts, so let's pull up. And we have over 700 people on the stream. It's live and interactive, so make sure to say hello in the live chat. And FYI, the live chat feed you see on your screen is coming from the YouTube channel. Happy 420, broskies. And yeah, let's blow this stream up. I appreciate it. But pulling up some of the live charts, we'll do a little live chart action Jackson for the broskies. Should be able to see on your screen. Is it coming up? There we go. So yeah, currently we're trading flat just at around 83,000 at the time of the live stream. This is a 1 hour chart. We do have an orange bull target sitting at 96.5. We also have an orange bear target sitting at 73.5. Which direction do you think the pre-low biddy will likely fare from here? Holla. And I'll read your comments out loud here in a bit. And checking out the 4 hour chart, rising wedge formation sensation, a bunch of targets. The super bull target here is 113.7, which would take us back above price discovery, currently sitting at 109.3. We have a red bull sitting at 105.4, and you know what they say, Red Bull, it'll give you wings. And I ain't talking about that Red Bull. Now, check this out. Also an orange target, 96.5, a couple of bear scenarios, 79.4 and 73.4. And zooming out from the 4 hour, we take a look at a daily chart. As you can see, thus far, forming a red. Yesterday, we closed in the green. The day before, we closed in the green. The day prior to that, big red candle close, and we've been choppy. But there is a rising wedge on the daily chart overall. We do have a red target just shy of 113,000, taking us back to price discovery, as well as one at 113.7. Two bear scenarios, 68,699, as well as 49 Gs on the daily chart. And zooming out a little further for the weekly, keep in mind tomorrow we get the weekly close. We do have the cup and handle target still here in play, sitting at 124,000, which I think is inevitable personally here for Q2. Let me know, when do you likely feel we'll be at that range? Obviously, we're probably about 30% from the top, which was achieved all the way back on Inauguration Day back in January. And zooming out a little further from there, we take a look at the monthly. And the monthly says we're going up forever, JV. And as you can see, we've been on a 16-year bullish trajectory, if you really want to zoom out when in doubt. But anyways, this month of April thus far, not much action. Obviously, we got to get back in the bullish momentum to regain the losses we've lost since January, achieving the all-time high. But there you have it, broskies. And again, welcome everyone join the live stream. Let's continue with the news. Next story of the day. Headline here reads, Bitcoin holds firm as stocks lose $5 trillion in the record Trump tariff sell-off. That's right. Bitcoin's gaining renewed attention as a hedge against financial instability after holding relatively steady during a record-breaking stock market downturn that saw $5 trillion white from the S&P. The S&P posted a $5 trillion loss of market cap over 2 days. My question is, where does all that money go into when people remove $5 trillion from the markets? And you know, people with a lot of cash are like laughing all the way to the bank right now. People like Warren Buffett that just are sitting on like hundreds of billions of dollars. So now they can buy everything dirt cheap, right? The largest drop on record, surpassing 3.3 trillion decline of the March 2020. That was after Novid during the initial wave of the pandemic, according to the April 5th report by Reuters. The record sell-off occurred after Trump announced his reciprocal import tariffs on April 2nd. The measures aim to shrink the country's estimated trade deficit to 1.2 trillion in goods and boost the domestic manufacturing. Now, here's the key difference. In 2020, Bitcoin crashed all the way down to like the $4,000 level. This time we held above where we're currently at in the 80s. Big significant difference from 4,000 to 80,000, just saying. But Bitcoin's dip after the tariff announcement was significantly smaller than traditional markets, proving Bitcoin's growing maturity as a global asset. That's right, Bitcoin has hit puberty. It's a beautiful thing. And according to the Marcin whomever, co-founder and chief operating officer of the Redstone blockchain, here's what they said. What we're potentially witnessing is an evolution in Bitcoin's market positioning. Historically, Bitcoin has been strongly correlated with risk assets during the macro shocks, but this divergence might signal an emerging perception shift amongst the investors. Bitcoin's fixed supply architecture inherently contrasts with the fiat currencies that may face the inflationary pressure under the tariff-driven economic changes. Here's the down low. Here's the deal. You can't put tariffs on Bitcoin. Haha. Take that, suckers. And while the stocks plunged, Bitcoin dipped just 3% over the same 2-day period and currently is maintaining above 80 G's, baby. And so you already know. Despite the $5 trillion sell-off of the traditional markets, Bitcoin shows its worth, staying above the 82 key support level, a sign that structural demand remains intact, even amid the forced selling and elevated volatility, which we all know is none more than life force, right, broskies? And despite the Bitcoin decoupling from traditional stocks, its initial plunge in price signals some investors will see Bitcoin as a risk asset, according to James Woe, the founder and CEO of venture capital firm DFG, quoting him here. With Bitcoin ETFs enabling the greater institutional exposure, it is now even more influenced by the macroeconomic trends. However, if Bitcoin remains resilient amid the ongoing uncertainty, its hard cap supply, 21 million finite limited supply, and decentralized nature could not only strengthen its digital gold narrative, but also position it as an even more reliable store of value. I dare say it's the ultimate hedge against inflation, against deflation, against corruption, and it is the ultimate store of value. It's also pristine collateral. It's also unconfiscatable. And it's also unfuckwittable. Take that. Now, despite the current lack of momentum, analysts are confident in the Bitcoin upside potential for the rest of the year. Let me know if you agree or disagree. Now, the growing money supply could push the pretty low biddy price above 132 in play before the end of the year. According to the estimates from Jamie Couts, chief crypto analyst over at The Real Vision, I say that's mighty bearish. In my humble opinion, I'm calling for 222,000 bear scenario this year of 2025. Base case 420 for the broskies. And bull scenario 1.1 million. You got to flex when you say 1.1 milli, son. Next story of the day, fam-a-lam. And again, welcome everyone joining us. Over 1,100 people now on the stream. For the lack of interesting articles, we're going to discuss Conor McGregor meme coin. And again, you can't make this shit up. Pretty common with popular celebrities, and he's the biggest name in mixed martial arts. Mixed martial arts former champ Conor McGregor launches his own meme coin. That's right. I believe he tweeted it. We'll get into that here in a second. MMA former champ Conor McGregor launched a meme coin called Real today, which will reportedly feature staking rewards and voting rights for token hodlers. And speaking of McGregor,
it's red panty night when you sign to fight me, eh?
Back at your home with your wife. It's a celebration.
Back at home with your wife. It's a celebration.
Spokesperson for the project shared that the token was launched through a sealed bid auction to eliminate snipers and bots hijacking the token launch. Yeah, they all say that, and they all get hijacked by snipers every single time. And in collaboration with the Real World Gaming Decentralized Autonomous Organization, DAO, the auction will take place from April 5th to the 2nd. In a statement shared, McGregor touted the launch as a fair meme coin offering. This is what he wrote on X. "This is not some celebrity-endorsed bullshit token. This is a real game changer that will change the crypto ecosystem as well as make real change in the world. The sealed bid auction is the new way of launching a token to prevent rug pulls and snipers." I'll believe it when it happens, but...
People are always saying about the talk, and I talk, and I talk, and I talk, but guess fucking what? I back it up. I back it up.
He also says this is about transparency. We are showing the world how it is done with integrity. He tweeted here, "I changed the fight game, I changed the whiskey game, and I changed the stout game. Now it's time to change the crypto game." Just remember this, you don't change Bitcoin. Bitcoin changes you. So again, I'm very skeptical with every single meme, especially celebrity memes, because these people know nothing about crypto. They're just trying to get rich. Not that he's not already rich, but you get the drift. The meme coin narrative peaked following the launch of the Trump meme coin. However, savvy traders continue hunting meme coins, keeping the market alive. So personally, I wouldn't touch that meme coin with a 10-foot pole, but that's just me. Maybe you guys are looking for your next meme coin come up. I don't know. You guys let me know your thoughts. Next story of the day, Satoshi turned 50 years old today. After the infamous freeze frame here, you should be able to see on your screen, Satoshi Nakamoto turns 50 as Bitcoin becomes a U.S. reserve asset. That's right. Satoshi, the synonymous creator of the Biddy, marks their 50th birthday amid a year of rising institutional and geopolitical adoption of the Bitcoin. The identity of Nakamoto remains one of the biggest mysteries in crypto, with speculation ranging from cryptographers like Adam Back, Nick Szabo, to the broader theories involving government intelligence agencies. Some may even say it's the current chairman of the SEC, Nippinator. And while Nakamoto's identity remains anonymous, the Bitcoin creator is believed to have turned 50 on April 5th based on details shared in the post. According to the archive data from the peer-to-peer foundation profile, Nakamoto once claimed to be a 37-year-old man living in Japan and listed his birthday as April 5th of 1975. Here's the proof of work right here. Nakamoto's anonymity has played a vital role in maintaining the decentralized nature of the Biddy network, which has no central authority or leadership. Thank God for that. The Bitcoin wallet associated with Nakamoto, which holds over 1.1 million BTC, has laid dormant for more than 16 years, despite Bitcoin rising virtually from nothing to 109.3 back in January of this year. And there's the new Satoshi statue in Lugano, Switzerland, which is pretty lit because from the back, you can just see through it. Pretty cool. Nakamoto's 50th birthday comes nearly a month after the U.S. President Trump signed the executive order creating strategic Bitcoin reserve and the digital asset stockpile, marking the first major step towards integrating the Biddy into the U.S. financial system. And at 50, Nakamoto's legacy is no longer just code, it's a cornerstone of economic sovereignty, according to Andy Leon, author of the Intergovernmental Blockchain Expert. Bitcoin's reserve status signals trust in its scarcity and resilience. Brilliance. And what's fascinating is the timing. 50 feels symbolic, half a century of life, mirrored by Bitcoin's journey from a white paper to a $1 trillion asset, multi-trillion, well, currently 1.6, but we did hit 2 trillion. Nakamoto's vision of trustless peer-to-peer money has outgrown its cypherpunk roots, entering the halls of power. However, lingering questions about Nakamoto remain unanswered, including whether they still hold the keys to their wallet, which is a fortune now tied to U.S. policy. Do you think those funds will ever move, or do you think they will be stagnant forever, Laura? Let me know. And back in February, Arcam published findings that attribute 1.096 million BTC, which is virtually 1.1 million Bitcoin. That's an 11, baby. Then valued at more than 108 billion to Nakamoto. That would place him above Microsoft co-founder Billy Gates of the World Wealth Rankings, according to the data shared by Coinbase director Connor Grogan. As he shares here, a Satoshi mining pattern set of addresses were recently cataloged by Arcam. We have definitely linked these to Satoshi, but there is good evidence. In total, this research points to Satoshi owning 1.096 million Biddy, 108 billion worth, making them wealthier on paper than the evil man himself, Billy Gates. And if accurate, this would make Nakamoto the world's 16th richest person. And despite the growing interest in Nakamoto's identity and holdings, his early decision to remain anonymous and inactive have helped preserve the Bitcoin decentralized ethos, a principle that continues to define crypto to this day. And the million-dollar question becomes, do you think his identity will ever be revealed, or do you think it'll be a mystery forever, Laura? And as you can see here, the mysterious inventor of Bitcoin, going only by the username Satoshi, set April 5th today as their birthday. No one knows why for sure, but the date may be symbolic. It is symbolic, and we'll be breaking why that is down here shortly, as it was in 1933, the 1933 Gold Seizure Act. And so we'll dive into that significance a little deeper next. Next story of the day. And shout out Samson Mao and Aqua Wallet. The thread here I'm going to read to you. On April 5th, 1933, the government tried to take everyone's gold. Today is the 92nd anniversary of this executive order, and here's why it matters. And you can see under the executive order of the president issued April 5th, 1933, all persons are required to deliver on or before May 1st, 1933, all gold coin, gold bullion, and gold certificates now owned by them to the Federal Reserve Bank, branch, or agency, or to any member bank of the Federal Reserve System. Criminal penalties for violation of the executive order, $10,000 fine, or 10 years imprisonment, or both, as provided in Section 9 of the order signed by the Secretary of the Treasury. So keep it in mind, they've done this before. What makes you believe they won't seize all the Bitcoin ETF? BTC, Max Kaiser believes they will. JV believes they will. Nippinator believes they will. And it doesn't mean they'll be doing it any day soon, but what if they continue to accumulate, let's hypothetically say 5 to 10 million of the Bitcoin supply through the ETFs over the years, and then the president, it could be a future president, doesn't got to be Trump, could be whomever, signs the executive order. It could be Biden's son, Hunter Biden, for Christ's sake, if he was elected president, just for a hypothetical, and boom, executive order, Coinbase, Brian Armstrong, hand over all your Bitcoin. It's in the name of national security. If you don't hand it over, blah, blah, blah. Anything can happen. Never trust the government. And anyways, here's the thread. The 1933 gold confiscation is a crucial event for the U.S. monetary history and serves as a reminder of the risk in relying entirely on centralized systems. Let's dive into the episode and how it reinforces the importance of self-custody. And again, shout out to the Aqua Wallet and shout out Samson Mao. In 1933, during the Great Depression, President Franklin Roosevelt signed Executive Order 6102, which prohibited U.S. citizens from owning gold. Under this order, citizens were required to turn their gold to the Federal Reserve in exchange for dollars. Those who refused faced heavy fines or even imprisonment. This was done in the name of the economic recovery and to prevent the gold from leaving the system. The reasoning behind the measure was simple. With the country in deep economic crisis, the government wanted to ensure that the gold remained in circulation to help control the money supply. The 1933 gold confiscation is a clear example of how centralized systems like governments and banks can take drastic actions that directly impact individual rights and property. This raises an important question. How much trust should we place in these institutions? Personally, I say zero. The gold confiscation reinforced the importance of owning assets that you can hold directly. Back then, a lot of the paper gold was easy to seize because the actual bars were stored in the banks. When you don't physically hold your asset, you're trusting an intermediary. Facts. Bitcoin provides the solution with its decentralization. It allows you to be your own bank. Self-custody is no longer an option. It's a necessity. The 1933 gold confiscation serves as a powerful reminder. Never underestimate the risk of submitting to centralized systems. The history of the gold confiscation teaches us that placing too much trust in authorities can come at a very high cost. Fun fact, today Satoshi would be turning 50, according to his peer-to-peer foundation registration. That date was also likely chosen on purpose as a symbolic reminder that Bitcoin, when held in self-custody, can never be seized. It is a subtle nod to personal sovereignty and to the core ethos of Bitcoin. And as we said, happy birthday, Satoshi. Satoshi, it's your birthday. And I agree. I think that's not a coincidence, but obviously the significance is the Gold Seizure Act of 1933, hence Satoshi choosing his birthday on April 5th. But you guys let me know your thoughts. And do you guys trust the government? Do you think now that we're in the year 2025, governments deserve our trust? Or are you still skeptical of the government? Let me know. Do you self-custody or do you keep it as a centralized exchange? Because, hey, the government would never do nothing bad to you. They're looking out for your best interests. Now for our feature story of the day, Bitcoin Policy Institute just proposed a $2 trillion bit bonds to slash the U.S. debt, proposing the United States to purchase 2.2 million BTC, which is a multi-billion dollar purchase of $200 billion. So let's break this baby down. And again, welcome everyone just joining us. The Bitcoin Policy Institute has developed an innovative framework to minimize the U.S. national debt through the Bitcoin Enhanced Treasury Bonds. The plan recommends that the U.S. Treasury should issue $2 trillion worth of the bit bonds. Good Lord. The proposal aims to reduce federal debt and enable institutional and retail investors to access exposure to the pretty little bitty going up forever Laura. So here's the bit bond proposal. Pay attention. The proposed bit bond structure will redirect 90% of the proceeds to finance the federal budget. The plan devotes 10% of the proceeds to the bitty purchases for the strategic Bitcoin reserve without additional burden to the taxpayers. So I guess it would also be a neutral way to purchase Bitcoin, because they said they weren't going to do it with the taxpayers' dollars, budget neutral. This approach helps the U.S. government control the debt and create the long-term value to the Bitcoin price appreciation. It's going up forever, Laura. The proposed bond issuance delivers 1% annual interest rates, which are much lower than the current Treasury bonds. Investors who accept low returns would obtain access to the Bitcoin-linked profit when the bond matures. Investors will get 100% of the Bitcoin gains up to a fixed annual return limit, while the government will retain any excess gains. And here was the B-Bonds framework, which was shared. I'm going to read it to you. Bitcoin Enhanced Treasury Bonds operate similarly to the conventional Treasury securities, but with an embedded Bitcoin component that transforms the risk-return profile. The U.S. Treasury would issue the Bitcoin bonds with a stated face amount and maturity, for instance, of 10 years. And unlike traditional bonds where the proceeds go to the general funding, a fixed portion of each bit bond is used immediately to purchase Bitcoin for the Treasury strategic bitty reserve. The remaining majority of the proceeds, 90%, still finances government operations in the usual way. And figure 3 shows building the strategic Bitcoin reserve. And as you can see, 200 billion, 10% of the 2 trillion, and they're looking to acquire 2.22 million BTC at an average Bitcoin price of 90,000. And obviously, the lower the bitty price, the more Bitcoin in which could be acquired. So under the structure of 2 trillion worth of the bit bonds were issued, roughly 20% of the 2025 refinancing needs, about 200 billion, would then be invested into the bitty, securing approximately 2.2 million of the bitty at a 90,000 hypothetical price for the National Reserve. This allocation balances strategic Bitcoin exposure with a conventional Treasury functionality. The Bitcoin Policy Institute proposes 2 trillion bit bonds to slash that U.S. debt, and it's roughly 37 trillion. Under the stable Bitcoin market, the Treasury would save up to 354 billion at the current market value. The potential of the Bitcoin value appreciation could reduce a substantial amount of the national debt by 2045. This framework provides avenues to decrease substantial debt without decreased taxation or reduction in the public expenditure. So virtually a 20-year play is currently 2025 to 2045. Let me know your thoughts on this. Now, tax exemption benefits. The Bit Bonds framework proposes tax exemptions upon interest and returns earned from the bitty value appreciation. This makes these bonds more attractive to drive the retail investor participation. The policy framework indicates that 132 million of the U.S. households could invest an average of $3,025 each. Institutional investors and foreign buyers are expected to purchase 80% of these bonds. The other 20% will be allocated to the U.S. household sector. The allocation mechanism ensures broad investor participation and supports large-scale institutions. The BIT bonds rollout consists of 3 defined phases. The first phase consists of a pilot operation to issue $5 billion to $10 billion in bonds. The second phase includes a legislative action and a full integration into the Treasury standard bond issuance schedule. Now, the government will purchase the Bitcoin through dollar cost averaging from different sources to reduce the potential price volatility. DCA all day, every day. The sailor put. Moreover, the proposal includes secure custody protocols, regulatory coordination to define the classification of the bonds under security and tax laws. The Bitcoin Enhanced Bond Initiative follows Executive Order 4201, issued by the Trumpster himself, our POTUS, on March, back in 2025, earlier in the year. Last month, to be more precise. The executive order classified Bitcoin as digital gold, creating the framework to expand the U.S. government's Bitcoin reserves. This proposal expands these reserves through the public bond sales without the additional taxes. Now, the projected U.S. Bitcoin reserve growth indicates it will achieve trillions of dollars in value by 2035, 10 years out. Under the most conservative predictions, the government-held portion could exceed the current U.S. gold reserves. Let's go. The Bit Bond Initiative positions the United States as the pioneer in the Bitcoin-based sovereign finance and financial stability. And if you don't know, now you know. What are your thoughts with the Bit Bonds? $2 trillion to slash the U.S. debt. And again, The bigger numbers at play here, 10% of that 2 trillion would be a 200 billion Bitcoin purchase, giving us approximately 2.22 million BTC at approximately $90,000 per biddy. Let me know your thoughts on that, and I'll read your comments out loud. Welcome everyone to the Q&A segment of the live stream. Now I can breathe.